All right, guys. So good morning. Happy Monday for everyone. We're gonna do a quick recap on what we did. Had a pretty good day, but there's a big lesson in my trading. I did make a really bad mistake on a trade, averaging down on a losing position, and it was just something that I could have turned out to be a big disaster. Let's just start with the ATER. ATER was in our watch list, was gapping up really good volume in the morning, and we traded pretty much all day. At the open, turned out to be a really nice 1 minute opening range breakup, but for some reason I didn't trade it because I wasn't watching it by mistake. It wasn't my watch list, but I wasn't watching it in one of my screen, and I really missed this big move on it. And then Brian jumped into that long. I waited to see if he can get another, on this pullback. I went long at 1520, 1532 for the breakup 1542, but I knew it was a very late entry and I'm chasing it, so that's a FOMO trade, so I quickly got out of it with a small loss on it. Sold off, came down, and then suddenly squeezed back up above the VWAP, and I decided to take it somehow like a 5 minute opening range breakup. Went long, and this pullback added more, and as you see, it just popped up about 1542. I came down, sold some, and these are all ads. Add more 1542 because we were seeing big ask, add. We took it all the way up to 1740. Came down, and this pullback I added more, somehow like a 920 trades, but on a 1 minute chart, it wasn't really a trade book thing, but I added more on below 16, came back up, and eventually I got out of it completely on 17 again. It just sold, added more, and then because I was so down on it, eventually I wasn't really getting anything, so I got out of it. And then I really stayed away from it. I was in a handcuff mode until it really broke out through 1734, popped up really strong on the pullback. I went again, tried to take another. First went here, I got stopped out, but as soon as it made a new 1 minute high, I jumped back in there long, sold, added more, sold all the way up to 1910. I think I got almost at 19, and then I got out all that, and then I'm not touching it anymore. So my worst loss was on AFRM. That was a really bad trade at the open, especially the mistake that AFRM, there's a news came right at before the open, just sold off heavily from 121 all the way up to 109. And then at the open, I wasn't really trading it, looking at it, but it turned out to be, on the first 5 minutes, turned out to be like a doji, strong. I tried to catch a opening range breakup from 111 to 113, and I added more. It was just like almost like 5,000 shares, and I wasn't expecting it to pop, and it dropped like 2-3 points on me, and that was a really bad loss on it. But what I did, which was a mistake, that I went long again, and maybe this time I want to pop up, and it just came down, and I kept adding on it, and that was the biggest mistake. That was a really bad mistake that I did, and I just kept adding on it, adding on it. It went up all the way up to 104. I should have been out. I had no absolutely reason to be in there. I just kept add until eventually popped back up, and I got out completely out of it here. I still closed it with a really bad loss, which most of the loss came in. I'm kind of came out of the break even with these ads, but that loss was really bad, and it could turn to be a disaster. And I was thinking, I didn't mention that in the chat because I was doing it on the side. It was just completely revenge trading, but I said, you know what, why not, you should tell it. And I knew I'm doing a really bad thing, and I knew it. So eventually it turned out to be a really bad day on AFRM for me, this is, and I've lost some really big. My biggest losses ever in my trading was on averaging down on a losing position, exactly like this one. This one in this particular has popped back up, but this could go just below 100 and just keep going. And we had the stocks like that. I mean, VIAC, that was like $120,000 loss that I had, was this one. It was like in this day that it was selling off from 65 all the way up to 40. That was exactly the day that I lost like 120 grand on it. I did a webinar on it. If you go to the education center, and I just tried to catch this reversal, and I couldn't, and eventually, I had to accept a $120,000 loss. So you gotta be really careful on not doing this. And it was just a very bad decision that I had, and I came out of it down. Sometimes some people are asking, what is the difference between averaging down and scaling in into your position? The difference is when you are scaling in, when you go slow and then you add again, you are still above or below a very important technical level. Like if you're long, you're above the VWAP, you stay above the. But if that theory breaks, you lose the VWAP. Then if you add in, you're not scaling in, you're actually averaging down, because the whole thesis behind your trade is gone now. So you can scale into your trade as long as the principles behind your trade book, principles behind your strategies is still in play. Like you want to go long above the VWAP, but you're not sure. You go in there and you slowly add into that. But if that technical level collapses, you have absolutely no reason for that, because your original thesis doesn't make sense anymore. I don't know if it's clear for you or not, but that's pretty much the idea. Thank you so much, guys, and all the best. See you tonight in the mentorships, into the onboarding class for new members.